Well, just in time for the opening of the baseball season across the country, let's take a check on Zach's Home Run Investor Service. I don't know what difference it makes that it's baseball season, but it seemed good to say. Brian Boland,
Perfect opening.
you're the editor of this service here. Let's take a little look back first on the first quarter, since that's all in the record books now. How was it for the service?
You know, I think the service did okay. We don't have the in-performance numbers, but I think we're going to be okay. You know, I think the idea is that we started off with a very choppy January. We had a good February, and then returned to a choppy March. So, you know, I think when we look at the overall, the indices, you know, the major indices really performed somewhat flat. And I think home run is going to end up showing us a nice little gain here in the first quarter.
Oil was the big story in the first quarter, the decline in oil prices, driving stocks, kind of mostly driving stocks. But then there was another story that emerged, and that was the strong dollar.
Right, and I think that idea is going to continue. We're seeing oil kind of come to a bottom right about here, you know, as we are just ending the first quarter. So just right around now, we're starting to see the opportunity now for oil to possibly move higher. There is talk, you know, obviously that there is plenty of production out there and there's plenty of supply, but we're starting to see the driving season pick up here. You know, getting into May, we usually see that. So look for oil to bottom right around here. But the strong dollar is definitely going to be a continuous worry here on stocks, especially big stocks, going forward for the next several months. You know, I think that's not going to impact Home Run Investor as much as because these are small cap stocks. We're not looking at that much international exposure for most of them, so that's going to keep that high, strong dollar pressure off of our stocks.
All right, is it me, or did I notice an increase in the use of stops?
Yeah, it's definitely an increase in the use of stops. It wasn't just you.
All right.
We did.
What's up with that?
Well, you know, we used a lot of stops here because over the last couple quarters, especially in 2014, we saw a lot of gains, you know, come off the books and end up as losers. We don't want to do that, and I think I'm being a little bit overprotective here, especially in the first quarter. You know, I got a chart here that's going to show pretty much all of the trades that happened in the first quarter, and as we look at that, we can see that there were a total of 8 stops, I think. Let's see, 3, 6, so 6 stocks that were stopped, and 8 if you include the 2 with maximum stop loss on those. So if we talk about the number of trades just on the stop basis there, you know, it's a big percentage. And what we did there is try to get out of stocks after they have been, you know, 5 or 10% winner, and try to at least lock in 1%. We can see in the last several names that were stopped out here, that's exactly what we did. And we just kind of moved into another very similar name, or, you know, maybe a week or 2 down the road, we moved into a similar style name from the one that we sold out of.
So you're trying to demonstrate a tighter discipline here?
Yeah, tighter discipline, and I think that's going to continue going forward. You know, we're going to try to keep most of those ideas in there. We're going to have those stops. You know, we're not going to be as tight on some of them, but I think, you know, over the future here, we're going to be looking at that tighter discipline and not allowing stocks go to that negative 20% that we did in the past. We're going to cut losers at about negative 10%, right around there.
All right. So looking forward now, how are you feeling about interest rates?
Yeah, interest rates have been a big concern as well. You know, I think recently the jobs number that we just had here at the beginning of April was very weak. That's going to eliminate the chance of an interest rate increase in July. September looks like it could be the time where the Fed says that they will increase interest rates in the December meeting. So it's kind of that 1-2 punch. They're going to let you know that it's going to come, and I think they'll let us know in September that it's going to happen in December.
You're looking at some specific sectors that you see outperforming?
Right. Sectors focus for home run is going to be healthcare. It has been healthcare for a while. You know, I was leveraged up in that space for a little bit. I'm going to try to probably get some of that leverage back here, because I think that's looking like the best case scenario, best opportunities out there. And tech is also going to look like it's going to get a little bit more leverage.
And you seem to have an idea rattling around in your head about 25% winners, something about that. What's
you know,
up with
one of the bits of nonsense that's floating around inside of my brain is that once our home run stocks have gotten to 25% or more of gain, they tend to really stick to that level and then more. So that's kind of our level of once we have those winners at that level, I pretty much put them off into a separate category. They're going to be long-term big winners for us. I think we've seen it with like 7 or 8 of our stocks that are right now 25% or more winners, and we've seen it in the past where once they get to that level, they really start to appreciate and really start to move up. You know, we've got a couple stocks that are up in the 80s and 90s right now, hoping to get those home runs. Definitely don't want to get those home runs thrown back into the park.
Right.
But, you know, sometimes that happens, but we're going to continue to hold most of those stocks that are up in the 80s, 90s and look for those home runs to come in for us.
All right, well, thanks for that. Brian Boland with me, calling the play-by-play on Zach's Home Run Investor Service. With Brian, I'm Terry Ruffalo.